In tonight's presentation, I'm going to reveal who I think is going to perform the biggest trick that Australia's ever seen, the biggest robbery of your average Australian, including myself, how it's going to happen, as well as who is going to do it, and why most people are not going to see it coming, and when it happens, they're going to be blaming the other party. And by the other party, I don't mean Labor or Liberals. So stick around. I'm going to piece it together for you. So here's some baseline as to the story.
Tonight, I also announce a new 6 basis point levy on the big banks' liabilities starting on July 1. This represents an additional and fair contribution from our major banks, is similar to measures imposed in other advanced countries, and will even up the playing field for smaller banks.
Well, banks are very clear about this. It's bad policy, it's policy made on the run, it's policy that's inherently risky, and it's something that every Australian is ultimately going to pay for. There's not a secret money-making machine out there that the banks can just turn up with. They have to take it from somewhere.
Okay, so they have to take it from somewhere. Any clues, any guesses? So I suppose it's going to be either the government or the banks, or both. What do you think? Anyway, this is just the beginning of this puzzle. Okay, so we've established the baseline. Now the next piece of the puzzle.
Banks want to send a message to their customers about how much they value them. Don't do what they may be contemplating doing. Don't do it. They already don't like you very much. They don't like us as politicians universally that much either. So we understand your pain. But prove them wrong on this occasion. Prove them wrong. Don't confirm their worst impressions. Tell them another story. Tell them you'll pony up and you'll help fix the budget.
Okay, anyone got it? I mean, I got to play this again. This is insane. Scott Morrison, the Treasurer, is talking to the bankers at the National Press Club of Australia as if they're some sort of kids, as if it's a joke. I mean, they were laughing. There's nothing we're all going to be able to laugh about. This is a serious matter. So I'm going to play this again for you. This is insanity.
Banks want to send a message to their customers about how much they value them. Don't do what they may be contemplating doing. Don't do it. They already don't like you very much. They don't like us as politicians universally that much either. So we understand your pain. But prove them wrong on this occasion. Prove them wrong. Don't confirm their worst impressions. Tell them another story. Tell them you'll pony up and you'll help fix the budget.
I mean, the gist of this clue is they already don't like you very much. The same way they don't like politicians, no problem. But they don't like you very much, so you're a soft target. So, okay, we're going to get to the next clue. I don't want to reveal my opinion. You probably may already know what it is. My hat off to you if you do. But, okay, we go to our clue number 3.
The South Australian government has followed the Commonwealth's lead and gone after the big banks, introducing a new bank levy. Announced as part of the state's pre-election budget, the levy is expected to raise $370 million over the next 4 years. Copying the federal government's levy, it will apply to bank bonds and deposits over $250,000 and exclude mortgages and deposits. At 0.015%, it represents South Australia's estimated share of the federal levy. The South Australian Treasurer, Tom Koutsantonis, justified the surprise move, saying the banks are raking in super profits.
Even with our tax, even with the Commonwealth tax, and even if everyone else, every other state followed us, they'd still be undertaxed.
I know. It's the banks. The big bad banks. I mean, they're robbing us. Absolutely robbing us. I mean, look at this clown, the South Australian Premier. He just said that even if all the states impose these extra levies, including then the federal government on top of it, they're still not taxed enough. I mean, how much tax on a private business is enough? I mean, don't forget, a lot of people are employed in these businesses. A lot of shareholders have their hard-earned cash invested in these banks, especially retirees who rely on the dividend yields as their income. I mean, this is insane. So, big bad banks and or the governments. Who do you think it is? So here's that insanity once again for you. You got to hear it. This man is mad. But hey, he's a politician.
Even with our tax, even with the Commonwealth tax, and even if everyone else, every other state followed us, they'd still be undertaxed.
Incredible.
Levy is set to begin on July 1, the same time the federal levy of 0.06% kicks in. The federal government expects its levy to raise more than $6.2 billion over the next 4 years.
$6.4 billion over the next 4 years. I mean, that's a lot of money in anybody's language. Okay, so far we have the banks on one side, we got the government on the other side. Now, we got the traders. Most people don't like traders because traders tend to make a lot of money, especially in the bull markets, and they like to flaunt their success. So everybody's jealous. Nobody likes traders, nobody likes banks, and governments have been less and less popular as the time goes on, that's for sure. So we got 3 players so far, and what I mean by trader is one just reporting on the market and reporting on these crazy bank levies that they're trying to impose.
More, I spoke with equities analyst Evan Lucas. Evan, first of all, this extraordinary move from South Australia to put their own bank tax on the Big Five. Any response on the market, or did it come too late?
Probably came a bit too late, Elise. The question also is how the market actually reacts to it tomorrow and what it actually means. How much the federal government also will sort of ask the question about what South Australia is trying to enact. The fact that it's trying to sort of say that it should get 6% of total loan book from all the banks that are invested there on the back of what they are in the economy. It's a very interesting and slightly convoluted way of looking at it, and at the same time, how does the rest of the states take this into it will also be the next question, and what happens. So the market is yet to react.
What's to stop everyone else doing the same thing?
Exactly, and that's what's already been raised, is that does this mean that there's a free-for-all? Particularly then if you started to look at states like New South Wales and Victoria, and probably even you could throw Queensland in there as well, that if they were to take the same methodology and what that would mean, the impact on the banks as a whole would be quite staggering, and therefore what it would also mean for the federal government's tax levy itself is all part of it. So it's very new, but it is certainly a big curveball, and there is a lot of very interesting commentary already around whether or not this could even pass, considering that how controversial it will be.
Let's move on. Oil prices still in free fall.
All right, well, oil prices, there's no good news there, unfortunately, for oil prices.
Well, that's probably showing up on the market.
Okay, so Evan Lucas is a market analyst. You know, he calls it like it is. Couldn't have made any better points. What is it to stop other state governments introducing those special levies on banks? And what's to stop then each one of those governments increasing whatever the initial levy percentage is? And then wants to stop the federal government to increase their own on top of all that? And where does it all stop? Now that we have the main players of this game of chess, here's a little bit more argument as to who's going to make this big robbery.
Bad policy that'll cost jobs. Westpac boss Brian Harter hits out at South Australia's new bank tax.
The fact that I'm talking to you is the first step in demonstrating that we are being very clear about our position on this.
And
oh, this is getting only better.
the big banks are starting a war of words in response to the new South Australian bank levy. The state government has copied the Commonwealth and put a tax on the major banks' liabilities. But the banks are fighting back, vowing to mount a political campaign against the tax, as other states, resentful about a lack of GST revenue, look at following South Australia's lead. Stephen Long reports.
Now, some of the very good points are made in this next argument. Very good points. I hope you can get some clues from that.
What's good for the goose
This measure will secure $6.2 billion.
is good for the gander. The banking levy imposed by the Commonwealth, now aped by a state, a Labor state.
Well, and they're still undertaxed. These levies on these banks are levied by countries all around the world.
But no state levies here until South Australia's slugging of the big banks.
Is that actually going to drive investment, support jobs within that state, or is it in fact going to make it less competitive?
Others may follow.
I'm not going to pretend it's not an attractive option. Revenue sources that generate lots of money is something that all state treasurers look to.
Unbelievable. I mean, governments all around the world, including, you know, local government, municipalities, state governments, federal governments, everyone's running out of money. So this is a big money grab. However, the governments are going to have to somehow deceive the public that it's not them, that it's something that had to be done, and it's the other people. It's the big bad banks or someone else who is to blame.
Aside from revenue raising, there's a policy rationale for the Commonwealth imposing a bank levy. As we saw in the global financial crisis, it backstops the banks and will bail them out in a crisis. But for the states, concerned about a lack of GST revenue, the bank levy is easy money.
Any other business that's involved in commercial activity in this country pays GST. They don't.
Ultimately, Western Australia gave up a lot of its own revenue source to replace with the GST that hasn't delivered.
The big banks plan to wage a public campaign.
The South Australian government has declared war on successful businesses.
There's already speculation about a court challenge.
Well, we'll pass our legislation and levy it, and if they want to take legal action against us, they can.
The South Australian levy is set to raise $370 million over 4 years. It won't break the bank, but there's keen interest in the principle.
Westpac is one of the largest private employers in South Australia and one of the main targets of South Australia's new tax. Its CEO, Brian Harter, has slammed the move as bad policy that will cost the state jobs and investment.
Of course it's bad policy. I mean, the businesses are going to find a way, the same way that the nature and the people find a way. Once the government changes the rules, they're just going to go somewhere else. I mean, this is a globalized world. Not to mention that Westpac and all the other banks actually don't even have to be in Western Australia. Now, okay, what are they going to do if the federal government does it and every other state does it? Look, they'll find a way. They'll do something else about the books. Or, here's another hint, they're going to pass on this tax onto the consumer. Now we're getting very close to what my opinion is, how it's actually going to transpire.
I spoke with Brian Harter earlier. Brian Harter, thank you for joining the business. First question, who is going to pay for this?
Well, it's too soon to tell, but clearly an impost in a particular location does raise costs, and in the end, there's nowhere to absorb costs. Costs go somewhere, and higher costs eventually get transferred on.
There is a suggestion from Malcolm Turnbull, the Prime Minister Malcolm Turnbull, that this is putting South Australia at a disadvantage, that by putting taxes up in a particular state, that businesses will take that into account. Would you look at changing the interest charge for, say, Bank of South Australia versus Westpac or St George more broadly?
Well, as I say, it's too soon to tell what our response will be from a customer market point of view. But that the core point there is the important one, which is, in the end, private enterprise creates jobs, not government handouts. And if private enterprise is going to create jobs, then they need to think about where they invest as being somewhere that's attractive, that wants the investment, and where those investments have potential to be rewarded.
This is a very good point. However much people might hate people like the CEO of Westpac because he's making millions of dollars a year in his salary, this is the key point. It's the private enterprises that make the economy go around. It's the private enterprises that should contribute to the GDP and the employment figures. It's not the government. The government does not make money. The government collects money and in the process gobbles up 70% of it and only gives you a value of about 30%. So they may be a big employer, but it's taking money from other people to pay their so-called government employees to help us all. But it gobbles up everything in the administration and bureaucracy in the meantime. So it's very inefficient.
So this is very bad policy. It is focused on raising the costs to businesses in South Australia. It pushes away investors who might have choices. And ultimately, it will be bad for jobs in South Australia and bad for the South Australian economy.
You've said that this will higher the cost for businesses in South Australia. The only way that's going to occur, though, is if the prices that are charged to businesses in South Australia go up relative to the rest of the country. Does that indicate that maybe that is something that is on the table, that Westpac could be looking at raising interest rates charged for South Australian customers?
Well, this is less than 24 hours old, so we haven't had time to think about what changes we might make in pricing. It's far too premature for that. But the rules of physics apply here, that investors have choices and employers have choices. We are, the Westpac Group, as it happens, is one of, if not the largest private employer in the state of South Australia. We have a number of operations centers in South Australia that support the entire country. And we make differential decisions about when we hire people in a place as to what the cost of doing business is there and the extent to which we're encouraged to do there. And among other things, we think it's really unfortunate that that commitment to South Australia, which we've had over a very long time, as the other banks have had in South Australia, is not taken into account. And it's a very short-sighted, ill-thought-through policy.
I do understand that this is only 24 hours old. You obviously haven't had time to come up with a set policy. I guess what's interesting for the audience, though, is you're not ruling out that there could be changes to Westpac's operations in South Australia, that this extra cost could be something that could see you move operation.
No, I'm not ruling that out. Of course, all options would be on the table.
And you also wouldn't be ruling out changes to interest rates for South Australian customers, that we could see that interest rates raised for both businesses and mortgages?
No, I'm not ruling anything in or out. I'm simply saying that all these things have consequences, and investors and businesses like the Westpac Group and the Bank of South Australia have choices.
We already heard from the West Australian government that they're looking at what South Australia has done. Do you think you need to send a strong signal at this point to ensure other states don't go down the same path?
Well, this is very bad policy, and it is the first example.
Look, the bank can send as strong of a signal as they want, but at the end of the day, governments have the weapons. They have the court system, judiciary system, they have the police, they have the military, so they will fight this to the end, with our money, by the way. So although businesses are very important for the government and for the country, politicians are brain dead, and they are going to do everything that it takes for them to stay in power. And again, I don't mean one party or the other. The government's sole purpose, number one purpose, if not sole purpose, is to stay in power and not collapse. So for that to happen, they're going to have to blame someone else. They're going to blame big bad banks, because everybody thinks the banks are charging too much, the banks are making too much of a profit, but nobody's complaining that their superannuation values are going up, that their maybe private investments in the bank shares is going up. They're getting 6, 7, 8% fully franked dividends year after year, but everybody hates the banks. This is just unsustainable. And by that I mean that the government is going to not tax people directly, because that's going to obvious. It's going to attack the least popular businesses, which are the banks. So the people are going to be cheering it on, only not realizing that the banks are businesses, they're private enterprises. They're going to also try and stay afloat and continue to making the profits that they're making for their shareholders and employ people that they employ. So they will have to pass those costs on to consumers, which means that if you have money in the bank, they're not going to give you as much of an interest. And more importantly, if you are up to your eyeballs in debt, which most people are, you are going to get slugged larger, bigger interest rate, because again, banks have to make up for the lost revenue in those because of those special levies. Not to mention that Federal Reserve and the international money markets are becoming a source, a more and more expensive source for the banks, for their capital, which means again that will push the interest rates up. And yes, you guessed it, that's going to finally crash the property market. However, that's not the subject of this presentation. It is the biggest robbery in the Australian history, and every average Australian, in my opinion, is going to suffer here.
This is very bad policy, and it is the first example of the unintended consequence of the federal government's intervention on the bank tax, the bank levy, a few weeks ago. It raises the question of who controls tax policy in this country. It's very unsettling, and it's unsettling for us as a business. It's unsettling for all businesses in those locations about whether their government starts with banks and moves to something else over time. I know from talking to our customers that they're not so much concerned about the impact on the bank. They're concerned about what it says about the business and investing environment in those states. And this is a very unfortunate path for state and federal governments to go down.
This is another very good point, because again, the businesses are just going to pack up and go somewhere else, definitely. And that's just going to spell unemployment. It's going to just ruin the complete economy. So you don't want that to happen. You don't want the uncertainty. As he mentioned, it's very unsettling. So you as a business, you come into some jurisdiction to open up a business, and they tell you one day, you know, your tax is going to be 30%, and then the next day it's going to be, you know, more than that, just like that. No conditions have changed. We just decided that, you know, the tax that you're paying is just not enough, so we're just going to increase it. I mean, that's just crazy.
Brian, would you look at either going down the mining industry's moves to have a campaign against this tax, to go, take it directly to the people, or potentially look at legal action?
We have to stand up and make a point that when we see governments making policies that are bad for jobs and economic growth in a particular location, then we need to bring that to life. And so, yes, of course, we will be talking to the community about our views on this and encouraging others in the business community to speak up and demonstrate to people that it is private enterprise that will ultimately create the investments and jobs that South Australia needs.
Spot on, but good luck with that, because again, the governments have the courts, they have the weapons, they have the police. I mean, what are you going to do? I mean, yes, you can pack up and leave somewhere else, but the government's going to push it so far until it's actually too late. And once again, let's see what the markets think about this, because ultimately, again, people don't think about how important the markets are, the free market. So the markets and the traders will ultimately decide what happens. If the banks are taxed too much, if they stop being as profitable, their share price is going to plummet. More superannuation, so pension funds are invested in bank shares, so people are going to lose money that way even more. The private investors that have bank shares are also going to lose. So it's a lose-lose proposition that it's been instigated by the government. So let's see what the market further has to say about this.
And I spoke to the Director of Equity Warrants at Citi, Elizabeth Tian, after the market closed. Elizabeth Tian, thank you for joining us. What's been the market reaction to this new South Australian banking levy?
Well, it obviously came out as a surprise, and we saw the banking sector open in the red, really stay in the red for most of the trading session. The three major banks, excluding Westpac, all closing lower, down around 1 to 0.5%, and also Macquarie Bank closing more than 1% lower. Now, it comes at a time of quite high political risk. Investors, both domestic and offshore, might take a cautious stance on this sector. We've got to sell on the three major banks with a neutral on ANZ.
Well, we've already seen from Brian Haas today that it does look...
Sell on three major banks except the ANZ. So it's Commonwealth Bank, Westpac and National Australia Bank. It's a sell. Now, traders, brokers don't normally, banks and other financial advisors don't normally put a sell on a stock unless it's red warning signs blaring everywhere, because they don't make money. They'd like the markets to continue to go up so they can get their commissions, and it's all well and good and everything's continuing the same way. Yet they've put a sell recommendation on 3 out of 4 big banks.
Like they're taking an aggressive aggressive posture on this one. Staying in the banks, though, NAB also looking at tinkering with their interest rates.
Yes, that's right, Carrington. Now, they've announced that they're going to lift by 35 basis points interest-only loans. Now, this is on the back of, a number of moves we've seen from the banks on this. APRA came out in 2016 saying the banks have got too much exposure to mortgage lending. Now, this is in the middle of, obviously, where household debt's at record highs, Sydney, Melbourne property prices at, record highs, and really the regulator wanting to see households and investors really wind back and pay down some of that debt. So we've seen a number of these moves. Now, National Bank at the same time has cut principal and interest by around 8 basis points, but it's lifting interest-only loans by 35 basis points.
All right, now who gets these interest-only bank loans, mortgages to buy houses? It's people who can barely scrape any deposit up to just get into this property market, onto the property ladder. So they're the most vulnerable, yet the National Australia Bank and the others will follow, no problem, will raise those by 0.35%, which is actually a big deal when you have a mortgage of $500,000, $600,000, $700,000, $800,000. It's huge.
Tian, I believe you've done a deep dive into the most recent labour numbers that we've got. What have you discovered?
Well, Carrington, as you know, the last labour numbers were quite surprising. It surprised the market. We saw a lot of jobs created. So what we've done is done a bit of a deep dive. Where have these jobs been created in the last 3 months? Now, it's really from a lot of the sectors which tend to have lower salaries, such as hospitality sectors, hospital workers, the services industry like baristas, waiters, transport, services like Uber drivers, and also professional services, which is one exception, such as some of the computer analysts, programmers. Now, 86% of all these jobs in the last 3 months have been created, have been from these sectors. Now, on the flip side, Carrington, we're seeing some of the jobs in the higher paying fields like mining, finance, utilities. Every single month in the last 3 months, they've been shedding jobs. So what does this mean? It means really the Reserve Bank is unlikely to move interest rates if we still get these good growth job numbers, but at the same time we're seeing a lot of this growth come from lower sectors. It means there's less inflation, less pressure, less wages growth sector. So that means that the Reserve Bank probably will sit and not move rates, we think, till at least end of 2018.
Yeah, low wages remain Australia's Achilles heel. Elizabeth Tian, thank you for joining us.
My conclusion is coming up, but before I do that, I gotta replay this very, very cunning speech by Scott Morrison.
Banks want to send a message to their customers about how much they value them. Don't do what they may be contemplating doing. Don't do it. They already don't like you very much. They don't like us as politicians universally that much either. So we understand your pain. But prove them wrong on this occasion. Prove them wrong. Don't confirm their worst impressions. Tell them another story. Tell them you'll pony up and you'll help fix the budget.
Banks are not charitable organizations. They're businesses. They're to make money, pay their people, employees, pay the shareholders, and ultimately allow people to buy properties. Yes, it's overvalued. Yes, it's all going to blow up. So, in conclusion, as we solve this puzzle, it'll be the governments who will ultimately bankrupt Australian people by taxing and implementing all sorts of different levies, firstly on most unpopular businesses like banks, and then that's going to extend to other businesses. They'll be blaming those businesses for that, and they will never blame themselves, yet they are to blame, as governments will never reduce the expenditure. Instead, they're just going to look for ways to increase taxes without being too unpopular with populous, which is why population is not going to realize that it is actually the government. So when you hear them say, I am from the government and I'm here to help, run for the hills.